side.
Was it like 7 years?
7. Yeah. Yep.
But it was
7 years ago. March. It was March. Matt and I were at a coaches meeting and had to bail out of here and drive through a tornado to go home.
we were sitting in Grace Community Church building the second edition. So I remember that well.
Yeah.
Because I called at the time, I still knew Jeff Penner from the Pittsburgh. He said, yeah, you might want to watch it.
Good. All right. Well, Dan will show up when he shows up, I guess. I'm going to call the work session to order. We only have one item on the agenda for the work session tonight, and that's our audit review presentation. It's all yours.
All right. Okay.
All right. Well, first of all, thank you for coming here tonight, and thank you for letting CLA serve you for another 3 years. My name's Harold Ray. I'm a signing director with CLA. Been there about 13 years. We've been working with the city since their 2014 year end, I believe. During that time, we've seen the city grow quite a bit, and we'll kind of highlight some of those financial things here in a minute. But for tonight, we'll go over a couple required communication letters and then go over the financial results as well. So there is a separate letter that goes over some of our required communications. So I'd encourage you to read that, but I'll just kind of hit the highlights of that in case, well, unless you want to look at all the debits and credits and that sort of thing. But some of the most important things to highlight there: no significant unusual transactions were identified. No significant difficulties were encountered. We didn't have any disagreements with management, and no new accounting policies were adopted. As far as internal control communications, nothing new here from what you've seen in previous years. With the first item, if you read through that, you'll see, ultimately the board, along with management, share responsibilities for the city's internal controls, and we're providing the outside audit function. And as the outside auditors, we can't be considered part of your internal controls. It's a deficiency that's common to governments of your size, and usually to get rid of that finding, there's a little bit of a cost associated with that in hiring someone else to prepare your financial statements outside of your auditors. The second item, identification of audit adjusting entries. Most of the entries relate to capitalizing property and equipment, some debt entries. Also had an entry to record some additional interest on some CDs and reclassifying some items within the special allocation fund. So single audit. If you have expenditures over $750,000, there's a separate single audit that looks specifically at your federal expenditures. As you can see there, you snuck in right below that threshold for this year at $741,000. So we didn't have to do that additional audit in accordance with uniform guidance. Coming up, that threshold is going to increase even further up to $1 million. So provide a little additional leeway. Looking at some of the historical financial information, this looks at the governmental funds. So that's your general fund, all the different parks activities and transportation, sales taxes, those sorts of items. It excludes the water and wastewater and sanitation primarily. Some of the larger spikes there that you see there in expenditures, if you look at 2022, is kind of an abnormal year. That had to do with issuing TIF bonds. And so it had an additional expenditure for paying the proceeds of that out in 2022. You look back, the big spike in 2019, there's also some general obligation bonds that were issued that year. So spending down those proceeds caused a spike there as well. But really for 2023, getting closer to more of a more normalized period, I guess you might say. So looking at revenues in total, you can see the main revenue source, of course, is taxes, and we'll look at the components of that here in a minute. Looking back for 2021 and 2022, there were new sales taxes issued in each of those years. So you see some really big spikes, but with no new taxes for 2023, it was just over a 5% increase in taxes from the prior year. The second largest component, I guess you would say, is intergovernmental revenues. That's primarily grant type funding. So if you look at 2020, 21, 22, it's primarily CARES and ARPA funding driving those up during that time period. So looking at your tax revenues, of course, sales taxes is the largest component there. Sales taxes are up about 9.8%, so some pretty solid growth for this 2023 year. Property taxes up about 2.6%, which generally, normal increases that you typically see there. And then franchise taxes are up about 8.4%, but they make up the smallest portion of taxes overall and have been fairly consistent year over year. So now focusing on the general fund. If you look at 2023, revenues actually exceeded expenditures by about $28,000, and that happened for the first time since 2019. So seeing some improvements there. The general fund is also supported by about $400,000 in transfers that come in. A big chunk of that is a kind of a franchise fee, if you would say, from the water fund. So even though historically expenditures may be in excess of revenues, there are some additional sources of funds flowing in there. Then looking at the general fund expenditures, the largest component is the police department. That was about $2.36 million for 2023. Next up, the general government or administrative type functions, that was at $1.18 million. Public Works, just over $1 million, and Parks and Rec at $883,000. This slide looks at months of expenditures and fund balance, or you can think of it as your reserve funds within the general fund. This year that ended at about 7.84. Generally, you want to see around 6 months of reserves within that general fund. And as you can see, looking back over time, it's never even dipped below 7. So overall, pretty healthy from that standpoint. Then looking at the water and wastewater activities, operating revenues ended at about $5.7 million. That was up about 12%. At the same time, operating expenses went up about 18% or $3.6 million. So netting all of that together, that leads to an operating income of just over $2 million, pretty consistent to where it was in 2022. Looking at your sanitation fund, the operating income there for 2023 is just under $12,000, so pretty much a break even. The ending fund balance within the sanitation fund is about $69,000. Overall, if you look at the expenses running through that fund, they average out to about $71,000 a month. So really, the ending fund balance there is less than 1 month's worth of expenditures in that fund. Then looking at the city's debt, there's no new debt for 2023, and you retired about $1,165,000 in principal, an additional $804,000 in interest citywide. Looking at your cash position, a big chunk of the city's cash is restricted. As you can see there, about $8.2 million. The biggest portion of that is about $2.5 million within the special allocation fund. A lot of that's related to the TIF bonds that were issued last year. About $2.5 million of that restricted cash is within the water and wastewater fund. It's restricted for debt service and capital project purposes, and then the remaining 3.2 million in restricted funds is kind of divided between a lot of different categories: debt, capital projects, transportation. A little bit was left over related to ARPA funding, so kind of the different pieces there. But overall, did see an increase in your cash position. After that, I just have my contact information, but happy to entertain any questions you might have as well. Kind of boring, but boring's
Well,
good.
thank you
I
as
think, when it
always,
comes
and
to
I'm
that.
glad it's boring that we didn't have any, thing that was not, no surprises, so.
Yep.
Okay. Cash position looks good. Guys got any questions?
Yes, I just have a question here on the, on the police department, on the general fund. Does that include overtime?
Yes,
And if so, do you have a percentage of what that is overtime?
I do not.
Okay.
But
that's
I'm
okay,
sure
we'll
they can get that
Yeah,
for you.
get that.
Yeah, that's including all of the police department, fuel, vehicle costs, all of that.
When you say percentage over time, percent of what?
Of the total.
Of the total
Yeah.
expenditure?
I guess I'm not sure if this is, thank you very much for putting this together, first of all. I'm not sure if this is for, you, Mr. Ray, or if it's for, Rick, but, on the question with the, on the material weaknesses, does that go to Rick, or do we want to talk about that now?
You can ask the question because Harold may be able to help with it, or Rick can, or I. Yeah.
Okay, just a question I don't really fully understand is the difference between the process that's used, what's it called, GAAS process and the process that the city uses. There's a difference, right? That was pointed out in the weakness, right? As far as the different accounting type. I don't understand. And I know that it was put in here that other cities use similar to what we do now, so it's not abnormal, but we're also being graded on a GAAS format. Is that just something that we need to, I know you mentioned that we would look at cost benefit analysis. Is that something that cities are moving towards or away from in your experience, as far as you get being GAS certified and using that standard? I'm not sure if that's what we need to do or look
Yeah,
into.
so you're probably talking about generally accepted accounting principles or GAAP accounting.
Yes.
So the city's financials are on a modified cash basis. So it's primarily cash in and out. It's modified for debt gets recorded as a liability. Capital assets that you purchase get capitalized. If you move to full GAAP accounting, there's going to be a lot of additional receivables for taxes that are coming in, receivables on people's utility bills, all the different payables, accrued payroll, retirement liabilities. There's a whole host of other things that would end up going into the financial statements. It does make them a little more complicated, I would say, maybe a little more difficult to understand. Just kind of depends on the size of the city. If you have any other requirements, every once in a while, if you issue bonds, sometimes they may want you to have GAAP accounting. Just kind of depends, but I would say for where you are right now, I think it's working for you the way they are. I wouldn't necessarily worry about changing that at this
Okay.
point. but-
Thank you. That's my question. I don't know, maybe something in the future, but right now we're good. Okay. Thank you very much.
Any other questions for Harold? Thank you. Motion to adjourn.
Motion to adjourn.
Thank you. Do I have a second?
Second.
All those in favor during the work session, say aye.
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 All opposed, say no. Stand adjourned until our 7 o'clock.